Hello traders, today we are going to go over two candlestick patterns that are very popular and common in forex trading. They're called evening and morning star candlestick patterns, and the only difference is, are we talking about reversal at the bottom, so from bear to bull market, or from bull to bear market at the top of the trading chart. So let's go first and review the evening star pattern. So evening star candlestick pattern is, as I said, one of the most common reversal patterns. It has three candles, and the first rule or step to follow in this pattern is that it must be at the end of an uptrend. So you must find a chart that has a clear uptrend like we have it now here. This is pretty extreme uptrend. As you can see, we went almost vertically 300 pips up in the euro dollar, and then we look for the three consecutive candles. First candle should be long and bullish. So we are still here, as you can see here, in an uptrend. The middle candle should be a candle that shows indecision by traders. So it's the best two candles to look in this form is either a doji candle, as this is the case here. So you can see that we have a long wick to the upside and long wick to the downside with a very short body, and then the third candle should be the big long red bearish candle. So we more or less here, this shows that we were in the uptrend, but right now we will correct and we will start pushing to the downside. And look at these three candles, and they actually tell you the full story. The first candle, long healthy uptrend candle. Then you have indecision. The market has not decided, is it going to continue to the upside or is it going to correct to the downside, and then it's a decision time. The third candle, huge long red candle, which more or less then tells you that the market is reversing and you should enter the mode sell rallies. So here you wait for a rally, and somewhere around here you can start thinking about selling the pair with the stop loss above the previous high, and then look for the downside move. And you can see that here we reversed. Here we created a lower high, and then we pushed lower almost more than 300 pips. It's as I said, it's a pattern for a trend identification, and as soon as you have the pattern here, as soon as you see that this is an evening star pattern, then you look to sell. This is the more or less the same scenario here in the dollar CAD. We have an uptrend. We have three candles. Here you have consecutive long bullish candles. Then you have a shooting star candle. So you have a long wick to the upside, but we close at the bottom, and then you have a long bearish candle. Another shooting star here. You can see it. This is all a big bearish sell signal, and then you can see that the price pushes below. And from here, when we more or less start thinking about entering the trade, so we're entering the trade, we look for we're then talking about 80, 70 or 80 pips profit. Of course the stop loss will be above the previous high. So this is as far as evening star bearish pattern is concerned. Let's now look at the morning star pattern. As you can see, everything is the same, just on the other side, vice versa. So it's a reversal pattern. Again, we are talking about three candles, and we are looking to identify a bottom, short-term bottom in a downtrend. After we identify the first bearish long candle, we look for the more smaller candle, which, as we said, is either in this case it's a hammer or a doji, and in this case, as I said, it's a hammer. So after we have a long continuation after the hammer, and then the third one is a long healthy candle, which this actually setup of 3 candles indicates that it's time to continue to start pushing higher. After, obviously, you can see here one low, second low, third low, so consecutive new lows, and then we push higher. And if you just wait for here, so if you entered your trade here at 2480, or let's say 2480, then you will put your stop below 124.50, and then you could have gained a lot of pips, 60-70 pips, if you aimed to close your position at this high. So everything is the same. Downtrend ends after we have a trend reversal, and then we look to push higher. Look at this example in dollar yen hourly chart. Again, the downtrend, new lows, you can see new low, new low, new low, new low again, long red candle. We have a doji candle, you can see long wicks on both sides, and then a big healthy green candle. This is a classic morning star pattern, and you can see that then we pushed higher and to shake off some bad positions. So we reviewed just to recap, two very, very common and popular candlestick patterns, evening and morning star patterns, that are used for trend reversals. And since we're talking about trend reversing, then it also offers us a good chance to limit our potential losses, given that in this case, in morning star, you need to put your stop loss below the previous low, and then look for the first resistance on a chart to close your trade.